We have Kunal Shah, Associate Fund Manager of Carnelian Capital, joining us to understand, what the market sentiment looks like as of now. Kunal, good morning. What are you making sense of the first trends of the Bihar poll outcome, and what is the kind of impact you're seeing in the markets?
Well, I think this is more of a sentimental, to be very frank and honest, because one state does not make a difference. But having said that, whatever I understand, I think NDA should lead basically the pack and they should form the government out there. But yes, sentimentally, it will keep the markets a little nervous till the results are out.
All right, all right. But yes, Kunal, coming back to the earnings season, how has it been for you? I mean, does it keep us on track for a double-digit growth for the second half?
Yes, I think this quarter numbers that have panned out are much better than what they were in the last quarter. So incrementally from last three quarters, what we are seeing is numbers tend to get better. Yes, all the pockets are not firing so far, and earnings upgrade season are not happening across all the sectors, which is very important for the next leg of markets to pick up. But yes, incrementally we see there have been pockets, which have improved on a quarter-on-quarter basis, or which have been improving on a quarter-on-quarter basis, and that's a good sign for earnings to pick up, in the second half of the year, and then basically upgrades to come by for the next financial year.
Okay, okay, all right. Kunal, coming to to the second quarter performance, large caps and mid caps have all relatively fared well, but the problem continues to lie within the small caps. So, what's your suggestion to investors when it comes to the small cap space?
I think the suggestion is to be very stock specific. First and foremost is to invest in good management, and then where basically the opportunity size is good, and then there is visibility of earnings to come by. Basically, in the next few years is very important when investing in small caps, and not forgetting to keep a check on the valuations, because in small cap space, in certain pockets, valuations are still stretched in the sense that a lot of earnings have been discounted for the next 2 3 years, and then there is very little room for disappointment in that case. So if earnings disappoint, wherever valuations have captured growth for the next 2 3 years, it's a kind of recipe for disaster. So to specifically answer your question, in small cap space, it's very important, to be bottoms up. Invest in companies, where there are good management, decent valuations, and earnings visibility to come by for the next 2 years.
Okay, okay. But Kunal, what about the valuations? I mean, we have some reports which suggests that the India's premium against the emerging markets have cooled off and they have come to the 10-year long averages. But how are you finding valuations and in tandem to how the second quarter earnings has been panning out?
See, I am a firm believer that valuations, are more in relation to how earnings are going to pan out, how growth is going to pan out, and how ROEs are there for India as a market in comparison to a lot of other economies. So India will always, kind of continue to trade at premium. Having said all that, earnings do play a very important role, and I believe that we are just around the corner where earnings upgrade season cycle will start, from Q4, and that is basically which will lead to a re-rating, or possibly the next leg of rally for the markets. So that's the sense on the valuations and the earnings growth that will come by for the Indian markets. We have already seen about 10% kind of growth so far on a year-on-year basis for the Nifty as a whole. But within that, there have been pockets, where earnings growth have been much better than 10%. And within sectors also, if we see, right, there have been pockets, of power. There have been pockets of cap goods. There have been pockets of, BFSI space, NBFCs, continue to report good growth with all the actions that have been taken by our regulators. Double-digit loan growth is around the corner. So, there are pockets which will kind of do good in the next 18 months or so. And also at the same point of time, they are those pockets where, there is valuation comfort as well for us to kind of make money in the next 18 months or so.
Okay, okay. You mentioned about the banking space, of course, but we have seen that PSU banks have made quite a comeback in the past 2 months in terms
Yes.
of stock performance. So how are you placed towards the private lenders? Because if there is indeed an interest rate cut in the couple of months, we could see once again a margin pressure building up as well. Given the kind of low inflation report we have, what are you envisaging? What are your projections going ahead for the private lending space?
Yes, so I think the first and the foremost is the loan growth, which basically slowed down at the system level in the last 3, 4 quarters, right? So with all the actions that have been taken, I think loan growth momentum double digit will be there in the system, which will help all of this, credit lending space to kind of report double digit loan growth. Coming to your specific question on NIM pressure, there have been one rate cut that has happened, the transition has happened, and it's largely there in the NIMs that have come by, basically, reported for this particular quarter. Some banks will do report, marginal decline for NIM in the coming quarter as well. But then largely, the cost of funds have also kind of come down. And in a loan growth environment, it's relatively easier to kind of price your assets a tad better as well. So while there will be a little bit of NIM pressure, but then the OPEX and the loan growth basically will take care, for them to report PPOP growth. And more than that, so far, there has not been much stress in the system. The balance sheets of all the lenders are very strong. They carry healthy provision coverage ratios. So even at the PAT level, post provisions, there should not be much difficulty for the coming few quarters, when it comes for the lenders.
Okay, okay. Let's talk about the paint sector, because yesterday we did see Asian Paints surprising us big on the back of its volume growth as well. But some of the brokerages remain wary of this growth story, whether it would sustain in the second half. How would you address this? At least not, even if not stock specific, but from a sectoral perspective.
Yeah. So I'll just give you a context over here. Whenever we have not just seen this playing out in paints right now, we have seen that play out in telecom. We have seen that play out in cements to an extent. So whenever large company or the challenger is focused only to get their market share, right, then at that particular time for the next few years till the time the challenger has kind of gained the market share that he desired, the sector goes for a toss, because the focus of the challenger is only to gain the market share. We have seen that with telecom when Jio just focused on getting market share, and there was absolutely no ARPU increase that happened all the while till the particular market share was gained. We've seen that play out in cement sector as well, where there was complete consolidation and focus on acquiring assets, which and there was no focus on making ROEs. Right at that point of time, also we saw no price increase and ROEs of existing players going for a toss. But once that consolidation happened, in telecom, we've seen ARPU increase happen for not only the challenger but also for other players in the sector, for the second player in the sector, and probably we are seeing in some pockets of cement as well, where there is pricing discipline that has come by now once consolidation has happened. So there is quite high possibility that same will kind of play out in the paint sector as well, where one of the challenger who clearly focused on getting a particular market share, reaching a particular number, is more or less there, right? And now even he will have to focus on basically ROE to be generated and profitability to be generated, right? This will kind of help the sector per se to kind of get the pricing better, and volume growth will also be there now once the leader who was once basically the challenger who was only focusing on getting market share, has reached there.
We'll watch out if, yeah, Asian Paints retains as a king in the upcoming quarters as well. But yes, shifting focus from paints, Kunal, we've had defense sector's performance as well, HEL, Bharat Electronics as well, where they've reported their earnings, steady earnings, but from a sector perspective, how are you seeing? Because they've had problems with respect to their margins, because if you look at HEL results, it was an operationally weak quarter for them. But from a growth visibility point of view and from a margin perspective, how would you address this?
See, defense is a sector, where not specifically talking about these two companies, but then the sector per se, right? A lot of the growth basically had been priced in the sector already. And also we have to be mindful that for most of these defense companies, the buyer is basically only one. Right. So while there is opportunity which is real and the growth which is real, we have to be mindful of three things. One is obviously the buyer, which is the government. So there's concentration out there. Second is obviously the pricing, basically, which we will get because of this concentration which is there. And third, obviously, is basically valuation, which is most important when betting on companies which have such large concentration of one buyer. Having said all this, the opportunity out there is very meaningful and big. Stock specific opportunities over there also are there. If we kind of increase the basket a little bit more, right, focusing on companies which are there in aerospace, focusing on companies which are there in niche defense, right, opportunities are out there, basically. So one has to be mindful of the three factors that I talked about out there.
Okay, okay, all right. We'll be addressing that. Kunal, let's talk about the FMCG sector as well. I mean, we've seen the kind of run up in the discretionary space, but FMCG has still reported a low single digit growth. Volume growth has been a challenge, majorly because of the GST led destocking. But given the kind of management churn we have been seeing, earlier we did see with Britannia as well, and now with Asian Paints. But how do you see this to go about? I mean, for definitely for the FMCG sector, how are you viewing the next upcoming quarters?
Yeah, I think basically all the actions that have been taken by the government should kind of lead to have more income in the hands of the consumer. Having said that, that so far, has not translated into earnings to the extent it would have been expected to translate for the companies that are listed. So one has to like really see how the rural market kind of plays out, how the demand for there specifically in rural plays out, and also pockets over there also. I mean, there's a lot of competition out there from the startup ecosystem as well. What India is consuming, how it is consuming is changing big time. That is kind of giving tough competition to these large FMCG companies out there, right? And because of which also there have been growth related issues for them, whereas smaller companies, directly D2C companies, and other smaller companies who have challenged niche categories for these players have been able to kind of grow, but put a dent on the growth of this big companies. So two things out here. One is challenge from the competition and the way India is consuming, whether these companies are aligned and agile or not, has to be seen. And second is obviously the demand from the rural markets will also have to be seen. Post all the actions that have been taken, which will for sure have incremental money to be spent by the consumers.
Okay, all right, all right. All right, just one last question before I let you go. I mean, we discussed a range of sectors as well, but anything that you have been conservative about as of now? I mean, we did see some, we've discussed about banks as a bet, and then we discussed about FMCG as well and defense as well. But any other sectors that you want to point out here?
So I think there's a lot happening on the traditional power segment as well, right? So that is again, an opportunity where few companies have valuations which are decent. They have got good order book visibility. There is a possibility of margin uptick that can happen out there. So that is one sector, basically, which probably should do good. Few IT product companies also, while the focus has been on IT services companies, but then there are few niche IT product companies, which have been also kind of reporting good set of numbers. They have been able to kind of, develop products which are aligned with what the ecosystem right now needs, and therefore can have good growth for the next 2 3 years. There are pockets of pharma as well, where there is valuation comfort, and basically with the way things have been improving on the on the USA front. this is again a space where there is, there are companies which should kind of do good in the coming quarters. There are few auto anchors also, which has got increase of content per vehicle, plus increase in wallet share from existing customers, along with increase in opportunity from other OEMs as well. So there are niche opportunities across these sectors, and where valuation comfort along with visibility of growth is also kind of there.
Okay, okay, all right. All right, Kunal, with that, we have to let you go, but thank you so much for your time and connecting with us.
Thank you so much. Pleasure.